Today, we're talking about the growing challenge of housing affordability and the impact that's having on net worth, plus a great forward-looking signal that bodes very well for the near term. We have that covered and more in this week's report. As always, we really appreciate you taking a few minutes to join us for our weekly market report, where we share our real-time insights into our local housing market. So let's dive in for this week. First up, as we talked about in the opener, one of the things that's an unfortunate consequence of rapidly rising interest rates and strong home price appreciation post-COVID is that affordability continues to be challenged. And the result is that widening gap that we're seeing on net worth in the past couple of years between homeowners and renters. There's a story kind of going viral about buyers in the early 70s who had experienced a rapid rise in mortgage rates similar to what we've seen over the last 18 months and wanting to put their purchase on hold until rates came down. And that didn't actually happen until the late 1980s. So the message to well-qualified buyers is, as much as you've watched how far your budget will take you diminish in recent years, they say the best time to plant a tree was 20 years ago, but the second best time is right now. And for sellers on the opposite side, something to think about is how the affordability challenge plays out for you if you're seeing less interest than you had hoped once you put your home on the market at the list price that you'd hope to get. Something to discuss with your agent is how to solve that affordability challenge without sacrificing your bottom line. And this is what builders have done really well in the past year, and we can take their lead. Seller concessions combined with some creative financing could be an enticing option for many would-be buyers out there. Here's new listings for the 4 counties we track, staying right in line with the volume of listings year over year. If we go over and look at contract activity, we saw a slight tick up this past week. I'm going to stop and spend some time on this one because this is our showing report, and it's a great leading signal. Those showings are active buyers, and they become contracts here in the near future. And we had some funkiness in this data set last week, so I want to, again, draw your attention a little bit to this chart. You can see showing activity has indeed hung in and maybe even seasonally accelerated, which you could likely tie to some improvement in mortgage rates over the past few weeks, combined with some uptick in available inventory. Here's off-market activity. These are those sellers that had their home on the market but took it off because they couldn't find a buyer. And you see a decline this week after the calendar turn, which mirrors the past 2-year trend. Here's the balance metrics. These next 2 charts, 60% on this chart represents a pretty balanced market. A little bit of an uptick with the slight uptick in contract activity relative to new listing activity. And here we add in off-market activity. We can see a similar pattern. So let's recap this week's report really quick. Affordability remains a mounting challenge as buyers look to achieve the wealth building goal of home ownership. And showing activity remains strong on the news of some rate improvement and a little bit more inventory to shop. As always, thanks again for joining us for this week's report, and we look forward to seeing you next week.